Well, thank you for staying tuned. Mr. Rotimi Fakayejo is a stockbroker and financial analyst. He joins me via phone. Thank you so much, Mr. Fakayejo. The market is down today again, with all share index significantly low, 2.27%. Top gainers, we have NEM Insurance, Prestige, LLX, we have Multiverse, we have Ikeja Hotels. Top losers, we have Connest, Dangote Cement, Japor Gold. Sovereign Inc., Stanbic IBTC. What is your reaction to this performance? Mr. Fakayejo, can you hear me? All right, then I'll connect with Mr. Fakayejo. But as usual, Efyong Cup is also in the house. Efyong, 2.27%. This is no joke.
Very deep. I told you yesterday that we should expect more of transactions in the lower territories. Remember?
Yes, you did.
What we have today as a result of huge losses incurred by MTN Nigeria, Dangote Cement, Stanbic IBTC, international bureaus. The list is almost endless, and you see there are big cap securities. Why this happening? Investors are holding back their funds, and majority of them are doing sell-off from their investments still to take more money and then get hold of it, in order to de-risk what they think is coming, from the market somehow. You don't want to burn your fingers. See, incentives to play the markets begins to dry up as it is, because economic pressure seems to create some problems that many people don't seem to have control over. So the best way that fund managers want to stay afloat is hold back the funds, reduce risk somehow. We've had so many of the companies, coming down like this. But, the market is not static in a way. Even as it is like this, in other words, it provides opportunities for those who really care about market.
Let's talk to Mr. Fakayejo. I hear he's online already listening to us. Mr. Fakayejo, take it away from there. The market is significantly low.
Yes, it is not unexpected. I think at the time, I think last week I made mention that the high cap stocks, the top big six, Seplat, MTN, Airtel, Nestle, Dangote Cement, and Boa Cement. By the time we begin to see receive haircut from these companies, the market is going to be heavily affected. That is exactly what we are seeing today with the downward trend in Dangote Cement and MTN. We may still see more of this because we've not seen haircut for the Airtel yet. So that one also may be significant. So the Osha index has dropped below 50 today, and when that happens, we may definitely see it dropping further. But at the time, we're going to have stability in the market, and I think that also will surface not quite long from now. But what we are seeing right now is just not unexpected. It's something that we know that it will come.
So at this time, I would always like to ask that question. Anyone who wants to invest, what would be your advice?
Well, those who have already invested, the best thing is they hold on to what they have invested, because the return on their investment by way of dividend payment is still much higher than what we expect from the money market. And also for the fact that this is only a time phase. The phase will be over and the market will come back alive again. So they are not going to lose anything out, because they will get good dividend return, and the market will definitely wear this out and will come back stronger than what we are seeing presently.
Thank you so much, Mr. Fakayejo. I appreciate your time.
So the big cap securities that have always supported market growth, they seem to be stable and then looking downward. Now, of course, it's a kind of a change. Do you understand? When you mark the markets very closely and you want to replicate the practical thing that you are seeing, exactly this is how it's going to be. Don't forget, by normal interpretation, what we see the market doing is a mirror of the economy. Do you understand? You are not pleased about what you see in the economy. That's why you see the market also showing the negative. That's nothing is supporting us this way. The companies, the managers are complaining, and then those who expect dividends, they are jittery. Exactly what the economy, sees. So what do? The major issue is, stability of economic factors. Encourage businessmen to stay in business. Those who need loan, let them get. Those who need diesel or petrol to run, let them run. Those who, so many things. And as we do all this, then we stabilize. The most important thing is get into production. We should produce and we should be able to sell across borders, earn more dollars than what is coming from oil and gas. Otherwise, things remain like this.
Thank you so much there, my colleague Effiong Ekop there.
Thank you, Tolu.
Well, let's move on outside our shores. Asian shares eked out modest gains today as buyers were held back by persistent global cost pressures, with investors turning their focus this week to U.S. inflation data and the prospects for further aggressive Federal Reserve's rate hikes. The unexpectedly strong U.S. job data on Friday have raised the stakes for the July U.S. consumer prices report due on Wednesday, especially for the Fed's policy outlook. European markets are set for a lower open, with the pan-region Eurostock 50 futures down 0.16%, German DAX futures dropping 0.16%, FTSE futures falling 0.12%, US stock futures and S&P 500 minus rose 0.22%. MSCI's broadest index of Asian Pacific shares outside of Japan was up 0.3%. The index is up 0.5% so far this month. Japan's Nikkei slid 0.95%, hit by weak quarterly earnings by heavyweights and lowered expectations for a video game market, while Australian shares were up 0.06%. The Bank of England is set to press on with plans to gradually sell its vast stock of British government bonds, even if an economic slowdown eventually forces it to cut interest rates. Now, that's the latest from the Deputy Governor of the Bank of England, Dave Ramsden. The BOE is primed to become the first major central bank to sell some of the bonds it purchased during more than a decade of quantitative easing, with a £40 billion sale program likely to start next month. The Deputy Governor in charge of BOE's roughly £1 trillion in balance sheet says it is more likely than not that borrowing costs would need to rise again after the BOE raised bank rates by 50 basis points to 1.7% last week. Tesla, in a fresh report, says it sold 28,217 Chinese-made vehicles in July, nearly two-thirds less than a month earlier, as a scheduled upgrade to its factory lines in Shanghai disrupted production. According to China's Passenger Car Association, the U.S. car maker exported 19,756 Model 3S and Model Ys from China last month. In June, it sold 78,906 vehicles and exported 968. Tesla China usually exports more cars at the beginning of a quarter, while focusing more on domestic sales at the end. Tesla suspended most of its production at the Shanghai plant in July due to an upgrade that aims to bring the factory's weekly outputs to around 22,000 units, compared with levels of around 17,000 in June. The head of Germany's network regulator, Klaus Müller, has welcomed the European Union gas emergency plan, which comes into effect today. The deal asks EU countries to reduce their gas demand to attempt to fill gas storage and prepare for a possible full Russian cutoff. It also asks them to voluntarily cut gas use by 15% this winter and could make the courts binding in on a supply emergency, albeit with numerous opt-outs for some countries and industries. Oil prices on international market pulled back slightly today on the latest progress in the last-ditch talks to revive the 2015 Iran nuclear accord, which would clear the way to boost its crude exports in the tight market. U.S. West Texas Intermediate crude recorded a 1% price dip to hit $89.85 per barrel, now selling at $95.74 per barrel, registering a downward price margin of 0.94%. Bonny Light's performance remains static in a red zone, trading at $118.10 per barrel. For the OPEC basket, the crude oil dealers offer $100 per barrel, recording a drop of 1.17%.